Hey, it's Tim from EminiMind. In this video, we're going to walk through the trades from Thursday. That's Thursday, October 27th. A lot of the things that occurred on Thursday related to some of the topics we've been talking about, such as the high and low of the first 30-minute range, the micros that occurred after halfway backs. And so there were some really good trades happening on Thursday, and wanted to run through those. Before I do that, the daily chart here, let's just take a look our series of retracements. So we had kind of the first retracement like this, and then actually it was to here, and then the second retracement like this, and then now our third retracement bounced off of the 37.7650, and its target is 39.55. Now we did come right up to the 34.15 on Friday. Friday at the close, that's the full high to low 50% retracement. And I did buy puts on Friday. We have a Fed meeting announcement coming up this Wednesday, so I like to get some puts ahead of the announcement in case we have a big move lower on Thursday. So that's what I'm watching for this week. Tomorrow and Thursday likely going to be pretty slow. Today was an inside day, didn't have any trades, just kind of a open where we close doji candle. And then we were also range bound as well inside the first 30 minutes for a good chunk of the day. But let's go to Thursday, Thursday the 27th. And the first thing you'll notice is we have this big V. Actually, backing up from there, we filled the gap right off the open. So we had a tiny gap up, and then in the first 15 minutes, we filled that gap, meaning we traded at the close from the prior day. And so I'll go ahead and mark the high and low for the first 30 minutes. And you can see, yes, we have this big V, and it pretty much takes us so the move down was the first 30 minutes. And then the second 30 minutes was a move back up from low of the day to high of the day. And we poked above the 30-minute range here, the 30-minute high, just briefly, and then fell back down and traded right back down to the low of the 30-minute range. And so this 30-minute high and low that we've talked about in the last couple of videos has been really beneficial for kind of identifying, okay, is there a good chance that we're going to be range bound? Or is there, at least in this portion of the day, so we're talking about the morning, or are we likely to be a trending situation in the morning? And so the first trade that I had for Thursday actually ended up being a pretty big winner. And it was just the high to low for the morning, right after that first 15 minutes occurred. That traded at the 50% up here, 38.54, and rather than just taking it outright right there, what I did, I draw up the opposing, so draw the long, because the trade setup, the trend is setting up short. The short traded first. Then I draw the opposing, which is a long here. We broke the 61.8 right down here, and then I drew up a short like this on the 512, which I would call a micro, a small setup, and then the 38.51 and a quarter is what the entry was, and that thing ripped pretty quickly, and was just able to kind of trail my stop on the way down by first. First, I kind of went to an extension right away because we sold off pretty strong, and then I kind of grabbed this swing high down to the swing low here, and that was able to keep me in above this swing high. You could also just trail the swing highs, so trail that little one candle. You had that one tiny green candle down here that could have ticked you out if you got super aggressive in trailing each candle. But it was early in the day, and so getting in a short like that falls fast, I chose not to go right to trailing each candle's high because I thought, oh, there might be a good chance that this day could turn into a bigger trending day. Remember, at this point in the day, we're only 20 minutes in, and so the 30-minute range has not even established itself yet. So that ended up being the first target plus 20 points on the second half of the position. Actually was 20 and almost 21 points on the second half of the position. So that was a nice big move down. From there, we came down to what was the low of the morning, and we started to rally. And I didn't do much on the move up. There wasn't a whole lot of super super big pullbacks in that consolidation. There was a 50% long here that kind of really kick-started that move up. Um, and then a really, really tiny move here that it was almost, I mean, it was so tiny. Like by the time you draw up a retracement like this, you're already at the price. I usually don't get in those. I don't like to drop my order on the trade ladder if it's already like on top of or below my price where I'd be dropping the order. So sometimes I can get in those if I'm fast enough, but in most cases, something that tiny is a little bit difficult to get in. But if we fast forward here to about 50 minutes after the bell, I took a short, and we'd come up. So that's right here, the top of the 30-minute range, and the short was like this, high to low. We were moving up in this series of retracements, halfway back, all the way up. This was the last retracement, and it broke the 61.8. And then we came down a little further, broke the swing low. And so I took a stab at a short here, 38.60.75. Um, it meets the criteria of breaking the swing low, breaking the 61.8 of the long, and then being at the top of the 30-minute range. What I don't like about this one is that the 50% is a little bit low, meaning I would prefer if we poked above a little bit higher above the 30-minute range first, and then the 50% lined up something like that, where the short is the 50% of that short, the entry, is right on top of the 30-minute range. So it was still a good trade setup, met the general criteria. That one just stopped me out. And we did end up rolling over. So there, indeed there was a double top. And then from there, I drew the full halfway back of the day. And fast forward again, this is going to be 7:48 Pacific. It's like an hour 20 into the day. We came down to this halfway back of the day, and at this point, I'm thinking, okay, yeah, there's a good chance that it's kind of late in the morning, and yes, we're within the 30-minute range, but the trends within the range were very clean, and so like from the open, we sold off down to lows, we rallied to make a new high in the day, and then we had a nice three red bars going right to the 50%, the halfway back for the day. And so if we talk about comparing range-bound days with trend days. So look at a bunch of range-bound days on like a 5 or a 15-minute chart and compare those charts to trend days and see how they differ and the characteristics that differ as it relates to being inside the 30-minute range, how much time is spent inside the first 30-minute range. Going one step further, you can take a look at all of those range-bound days, and some range-bound days are cleaner than others. And the range is big enough that you can get short at highs and then ride it down, get long at lows and then ride it back up, going top of the range to the bottom of the range, bottom of the range back up to the top of the range. And a halfway back of the day is the one halfway back that I would look at trading if we are inside of the 30-minute range. I don't want to be just taking any old retracement. That's really the only spot that I want to be looking for a 50% retracement at the halfway back of the day, meaning the low to high or high to low of the day. And so this one, we came down, we were again moving down in a nice clean series on the micros, lower high, lower low, lower high, lower low, down, 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 lower high, lower low. We hit the 50% long that I've identified over here on the 5-minute chart. And so what I want to do is zoom in to the 512 tick chart. And then from here, I just came in and waited. So this was the last retracement short that eventually broke its 61.8 here. And then this was the swing high that it was anchored to. So when that swing high was broken, I can just take from low to high like this. And that set up a long here at 38.50. It got a first target, and then it broke the swing high here. And I went ahead and tightened my stop. I moved it to break even. by drawing the next retracement, just like I did there. And then if you look at the 60-18, and then you subtract, round down and subtract 2 ticks, that's basically where I like to trail my stop. And you can see that by doing that, it puts my stop at break even. So rather than as soon as the trade moves up and breaks the anchor points high, I'll just move my stop to break even, because I know if I were to draw the next retracement and then do that little calculation, take the 60-18, round down, subtract 2 ticks, that's going to be right about at break even. So I'll move my stop to break even first, then I'll draw up the next retracement, and let's say we kept going higher, then at that point I could bring my stop up. So that was just a little small winner to kind of cap off the day. That first one was really the home run, and ended up being a nice turnaround from Tuesday, which was kind of a bit sloppy, and the chart was not as clean. And so it was nice to see. Yes, we were within the 30-minute range for most of the morning, but the retracements that we're setting up were a lot cleaner. This week, today, tomorrow, and then Wednesday, are probably like my 3 lightest trading days of the year. That clump, the 3 days leading up to the Fed meeting announcement. So every 6 weeks, you kind of have this Monday, Tuesday, Wednesday. I tend to be pretty conservative and not do much trading. I don't trade the Wednesday morning of the Fed meeting. And so going into this week, I'm really looking for Thursday. I've got the puts that I'll be hanging on to through the Fed meeting, and then we'll see what happens. And if we sell off, then there should be some good opportunities for day trades. And if we start rallying, then going back to that daily chart to close, we've got the 60-18 all the way up at 40.1225. If something bizarre happened, like tomorrow on Tuesday, we were to rally really strongly, depending on how far we went, I would just likely hang on to those puts. If we were to, all of a sudden, rally a couple hundred points and close above the 60-18, you'd have to be scratching your head a little bit, and that might cause me to close them. But at this point, the catalyst is Wednesday. That's the purpose of the puts, and so I'll just hold those through the expiration or through Wednesday. See if we get a sell-off on Thursday, and I usually sell a couple on a big move, just to lock in profit, and then wait for maybe a follow-up day on Friday, and maybe look to sell them on Friday, or cover, just because you're going into the weekend. So we'll see what the week brings. Tomorrow morning we will be doing a live trading session, even though I'm not expecting a whole lot. We tend to have some pretty good discussions anyways, regardless of the day, if it's a slow day or if there's a lot going on. So you're welcome to tune in there over at EminiMind.com/VIP. And if you like these trade recap videos, give me a thumbs up. Thanks, and I will talk to you soon.